Stop scrolling for a second and really let this sink in. If what I'm about to walk you through is even half true, then XRP is not just another altcoin anymore. It's the quietly preloaded software update for the next version of the global financial system. And the insiders may have just tipped their hand in the most reckless way possible. Welcome back to XRP Insider Network, the channel where we break down the rumors, leaks, on-chain footprints, and institutional breadcrumbs the mainstream doesn't want to stitch together for you. If you're new here, smash that like button right now, hit subscribe, and turn on all notifications so you never miss the drops that others only talk about weeks later. Because today's story could age like one of those "I was there before it happened" moments people brag about for years. And quick but important reminder, nothing in this video is financial advice. We're not telling you to buy, sell, or hold anything. This is research, speculation, and narrative analysis based on public breadcrumbs and alleged leaks, and you need to make your own decisions like an adult. All right, let's get into what people are already calling the Project Triskelion leak, because the shape of this thing has 3 arms, and they all point back to XRP. Here's the spark: a contact of a contact. Someone who says they work for a mid-tier European prime brokerage that provides liquidity routing for several larger funds, claims they were accidentally CC'd on an internal email chain between their risk team and a major US asset manager you definitely know, about pre-positioning settlement rail liquidity ahead of anticipated ETP product approval on a cross-border basis. Normally, that's boring compliance language, until you see 3 specific terms in the draft document they say was attached: ODL configuration, XRPL native USD collateral rails, and the phrase strategic convergence with ETF liquidity providers. Now, if you've been following the space closely, you already know that Ripple's USD stablecoin, RLUSD, is live and has crossed serious milestones on both the XRP ledger and Ethereum, and that it's already being used as collateral in certain institutional contexts. You also know that Ripple agreed to acquire prime broker Hidden Road earlier this year, a firm that clears trillions in volume for hedge funds and trading desks, giving Ripple an institutional-grade highway plugged straight into where the real money moves. Put that together with the recent shift by giants like Vanguard, finally allowing crypto ETFs on their platform, including products with exposure to XRP, after years of acting like crypto didn't exist, and then throw in the constant drumbeat of speculation that BlackRock is quietly preparing an XRP ETF after testing the waters with every other major asset, and you start to see why that emailed phrase, strategic convergence with ETF liquidity providers, doesn't feel random at all. The alleged leak goes a step further, though. In one of the screenshots, there's a bullet point referencing XRPL bridge corridors for off-exchange settlement, and next to it, a comment bubble from someone whose handle matches a known director-level name at a large NYC fund questioning timeline alignment with Swiss NDA counterparties. That word NDA counterparties is the landmine here, because for months there have been rumors of a non-disclosure agreement involving Ripple, at least one Swiss megabank, and what's been described by a self-identified ex-banker as a US blockchain infrastructure firm working on something way bigger than just cross-border remittances, something that allegedly touches biometric identity mapping and compliance at a global scale. When you lay that rumor next to a fresh internal memo about Swiss NDA counterparties and XRPL bridge corridors, you don't have proof, but you have pattern. And pattern is what insiders live off of. Before we go deeper, if you're already connecting dots in your head and feeling that mix of excitement and nerves, pause the video real quick, hit like, and drop a comment with the words, "I see the pattern," so I know who's really tracking this in real time, because this next piece is where it goes from spicy to almost unbelievable. Rewind a few months and remember that obscure but very real document submitted to US regulators talking about XRP as a strategic financial asset for the United States, a memo that suggested officially clarifying XRP's classification, removing certain banking restrictions, and basically opening the door for banks to use XRP-based rails without living in regulatory purgatory. Most people treated it as just another think piece. But imagine this. What if that memo wasn't just a random policy suggestion, but the public tip of a private iceberg? A trial balloon to see how markets, lawyers, and other agencies react to the idea of XRP being elevated from crypto problem child to infrastructure-level asset in the toolkit of US-aligned financial architecture. Now jump back to our alleged Project Triskelion email. The source claims the internal codename used by their desk for this transition is literally Bridge Sovereign, a phrase that sounds like it came out of a dystopian fintech novel. But when you think about it, describes exactly what XRP has always marketed itself as: a neutral bridge asset sitting between national currencies, capable of moving value instantly across borders. Add in the recent chatter from global bodies about the need for interoperability across fragmented payment networks and central bank digital currencies, and suddenly a neutral, highly liquid, institutionally plugged-in bridge becomes not just useful, but necessary. Here's where it starts to reek of pre-positioning. In the same time window that this email chain supposedly happened, on-chain analysts have been tracking a pattern of large XRP movements from exchange-linked wallets into new, clean addresses, followed by those addresses interacting with known institutional liquidity hubs and RLUSD-linked pathways. None of that is illegal. None of that is conclusive. But when you see supply leaving exchanges while rumors of ETF filings ramp up, and when analysts publicly speculate that a BlackRock-branded XRP product could become one of the largest in the market, you have to at least ask, who is quietly building their inventory while retail is bored, distracted, or scared? Then layer on top the most recent revelation, a Bloomberg report that Ripple has been structuring deals with major Wall Street players that effectively guarantee a return on certain share purchases if Ripple doesn't hit its targets, and the separate revelation of a massive share sale that brought in some of the biggest names in traditional finance. People on the inside of Wall Street don't play these games for 2x gains. They play them when they think they're getting access to a pipeline, liquidity, products, fee streams that will reshape their business line. If Ripple owns a prime broker, controls a dollar stablecoin sitting natively on XRPL, has a network of central bank and institutional relationships, and is potentially sitting on a clear regulatory runway for XRP as non-security infrastructure, then what exactly are those Wall Street whales betting on? A remittance app? Or the underlying rails that all future tokenized assets might quietly rely on? And here's the uncomfortable part of the alleged leak. One of the messages contains a frustrated comment from a compliance officer asking whether retail optics have been considered if ETF pipeline demand forces us into aggressive secondary market accumulation. Translation: if these ETPs and ETFs are greenlit faster than they can source, they may have to scramble into the open market to scoop up XRP from wherever it's still liquid, which could create the kind of scarcity and volatility that leaves everyday holders wondering why this only became safe and approved after the big players had already spent a year quietly accumulating in advance. If you're still watching at this point, you're the kind of person this channel is made for, so make sure you're subscribed with the bell on, because these stories don't unfold on a tidy weekly schedule. Sometimes the key detail drops in the middle of the night on a random Tuesday, and we're here to read it in real time with you. Let's zoom in on timing, because in finance, timing is almost never an accident. Ask yourself, why, after a decade of dragging its feet, would a giant like Vanguard suddenly open the gates to crypto ETFs and mutual funds right as speculation about XRP ETFs, futures products, and institutional exposure hits a fresh peak? Why would that pivot come not during the early, chaotic days of cryptomania, but after rails, custody, and regulation have started hardening into place. And after XRP has already survived a multi-year cage match with the SEC that forced every fund, bank, and regulator on Earth to learn its ticker by heart. If you're an asset manager, you don't just look at charts, you look at narrative risk. What happens to your reputation if you publicly embrace an asset the government later slaps down? XRP just spent years in that danger zone, and then emerged with more legal clarity than half the market. So if there were going to be a moment for big money to flip the switch, it wouldn't be during maximum uncertainty. It would be after the smoke cleared, quietly, while attention is elsewhere. And what do we see now? Funds lining up futures products, analysts openly talking about the odds of a spot XRP ETF following the pattern Bitcoin set, futures first, then spot, and rumors swirling that the biggest asset manager on Earth is lining up to be first or second in line when the gate finally opens. That's the ETF side of the Triskelion's first arm. Now flip to the second arm, sovereign strategy. That document calling XRP a strategic financial asset didn't come from a random influencer. It was filed in a serious context, arguing that the US could leverage XRP's existing liquidity and technology stack to free up banking capital, streamline cross-border flows, and even enable a kind of digital reserve structuring. Whether you think that's realistic or not is one question. The more interesting question is, why did someone feel the need to put that vision on paper at all? You don't propose turning a random altcoin into strategic infrastructure unless you see it as technically capable and geopolitically useful. And if one camp is thinking that way, you can be sure rival camps, other countries, other blocs, other institutions are not sleeping. The alleged Swiss NDA, the cooperation agreement with a major Swiss bank, and talk of biometric identity mapping could represent a parallel track. And if the US drags its feet, we'll build this in Europe or globally anyway contingency. In that framing, XRP becomes a contested rail, a neutral bridge asset courted by multiple power centers, who each want influence over how it's used and governed. That's not the kind of battleground you see around a dog coin. It's the kind you see around oil, shipping lanes, or undersea cables. The third arm, identity and compliance, is the one that will probably feel least exciting to retail, but it might be the most important to insiders. Central banks and regulators have been loudly and repeatedly hammering on three themes: interoperability, traceability, and control. They don't want 1,000 isolated CBDC islands that can't talk to each other. They want a mesh that works like the Internet of Money. They don't want trackless cash equivalents at scale. They want programmable, traceable value that can be monitored and throttled. And they absolutely don't want a future where they're hostage to one private company's walled garden. XRP's biggest flaw in some eyes, that it is a neutral, open ledger, not fully controlled by any single central bank, might actually be its biggest advantage in a world where nobody trusts anybody else enough to give them the keys. A neutral bridge, if properly regulated and wrapped in identity controls, becomes the least bad option. That's where biometric identity mapping and KYC-linked wallets come in. The alleged NDA language suggests tying digital identity more tightly to access permissions on certain rails, exactly the sort of architecture you'd need if multiple countries, banks, and institutions all want assurance that every high-value transaction crossing the bridge belongs to a properly vetted entity. Combine that with Ripple's relationships with dozens of central banks over the years, its CBDC pilots, and its relentless messaging about compliance, and you start to see how the pieces fit. A compliant, identity-aware, neutral bridge asset facilitating value flows between tokenized currencies, securities, and stablecoins, all while dressed up to the public as just another crypto ETF you can buy in your broker app. Think about how the internet rolled out. First, it was weird computer hobbyists, then chat rooms and static web pages. And only later did we realize that quietly, in the background, the entire world's infrastructure shifted onto it. By the time it felt normal, the rails had already been laid. Crypto could play out the same way. Chaos first, regulation later, then quiet integration, while everyone is distracted by memes and price charts. If Project Triskelion is real, or even directionally accurate, then we are somewhere in phase 3, the quiet integration phase, where the global financial architecture starts being rewired to route through a handful of interoperable, compliant, neutral rails. XRP doesn't have to be the only one, it just has to be one of the chosen few. And in that game, positioning is everything. So where does that leave you, the individual XRP holder or curious observer? It means you are standing in a foggy field where giants are moving around you, sometimes visible and sometimes not. Every so often, a footstep lands close enough that you feel the ground shake. That's a share sale, a prime broker acquisition, a new ETF access decision, an obscure memo calling XRP strategic, and you have to decide whether that vibration is random noise or part of a march towards something bigger. That's why these alleged leaks matter, even if they never get proven in the way people want. They're part of the pattern language of power. The insiders will never tweet, "Hey, we're about to route the future of cross-border settlement through this thing you've been mocking on Reddit for years." They'll move through NDAs, compliance memos, quiet ETF filings, acquisition term sheets, and pilot programs with obscure names. And by the time the narrative is safe enough for mainstream anchors to read it off a teleprompter, the allocation decisions will have been made long ago. Here's the bottom line. We might look back on this moment, these emails, these NDAs, these policy documents, these quiet ETF access flips, as the part of the movie where the audience knows what's coming, but the characters on screen are still arguing in the dim light. XRP's story has always been polarizing, but polarization is exactly what you'd expect around a piece that some want to capture, some want to kill, and some want to quietly co-opt into their own designs. Whether you see a grand, coordinated Triskelion plan or just a messy convergence of opportunistic moves, one thing is hard to deny. XRP keeps showing up again and again in the rooms where the future of money is being argued over. And leaks like this, real, fake, or something in between, are a reminder that when you build rails for value, you're not just building tech, you're building geopolitics. If you got value from this deep dive, hammer that like button so more people see it. Make sure you're subscribed with all notifications turned on so you don't miss the next piece of this puzzle. And let me know in the comments. If you had to pick, is XRP being set up as the hero, the anti-hero, or the scapegoat in this next chapter of the financial system? Because whatever role it ends up playing, it's becoming harder and harder to argue that it won't be on the stage. This is XRP Insider Network. Stay sharp, stay curious, and I'll see you in the next one.